Well, what are the other changes proposed in the budget? Let us see. The first one is section 80TTB. You may remember one more section is there, that is 80TTA. Savings bank interest up to rupees 10,000 is exempted under section 80TTA. So, what is 80TTB? This section is proposed for senior citizens. In case of senior citizens, interest from bank deposits, fixed deposits, or post office fixed deposits, or recurring deposits, interest up to rupees 50,000 in a financial year are exempted from paying tax. That section is known as 80TTB. So, this will come into force from next financial year, that is from April 2018. But there is a catch here. In order to get exemption under this section, such assessees are not eligible to claim benefit under section 80TTA. And how about TDS? Currently, bank interest above 10,000, if the fixed deposit interest is above 10,000, then the bank will deduct TDS at the rate of 10%. And in this budget, there is a proposal in case of senior citizens to increase the limit to 50,000. That is, in case of senior citizens, interest up to 50,000 from bank deposits are not subjected to TDS. Section 80D, there is a change in section 80D. Here the limit of deduction under section 80D in case of premium paid for medical insurance policies and in case of senior citizens has been increased from 30,000 to 50,000. So, this deduction, this benefit can be availed by the assessee himself, or the assessees like persons who are paying premium for their parents, they can take this benefit, or the senior citizen assessees themselves, they can take this benefit. And see one more scheme, Pradhan Mantri Vaya Vandana Yojana. It's already there in the market. It has been extended up to March 2020. So, under this scheme, senior citizens get an interest of 8% per month assured for 10 years. It is a scheme launched by LIC. Okay. And earlier there is a cap for investment in this scheme. The cap was set at 7.5 lakhs per senior citizen. Now the cap has been increased to 15 lakhs. So, every senior citizen can invest up to 15 lakhs in this scheme, and they are eligible to get 8% interest for 10 years. So, this is Pradhan Mantri Vaya Vandana Yojana. This budget has introduced a special feature which is known as standard deduction. Standard deduction of rupees 40,000 in case of salaried employees as well as pensioners. And see here, pensioners, this is the first time, and for salaried employees, they are enjoying this benefit in another form. In case of salaried employees, they are already exempted from travel or transport allowance of rupees 19,200 per year, and medical reimbursement up to 15,000 per year. So, effectively they will be getting extra benefit of only 5,800. So, this is in case of salaried employees, but in case of pensioners, this is absolutely new. It means that this 40,000 is a new thing to pensioners. So, this 40,000 pensioners can reduce from their total income without submitting any proof. So, this is known as standard deduction. So, actually this will help a lot for pensioners rather than salaried employees, because salaried employees, the benefit is only meager, that is only rupees 5,800 is the extra amount that is allowed as deduction, because they were already enjoying 19,200 as transport allowance as well as up to 15,000 as medical reimbursement. The only difference being, in earlier case they have to submit bills as a proof, and in this case standard deduction means it is straight away they can reduce, there is no proof required. So that is the main difference. One more change has been brought by this budget with respect to section 54EC. So what is section 54EC? It talks about investment in capital gain bonds issued by Rural Electrification Corporation and National Highways Authorities Limited. And what is capital gain bond? As you know, capital gain tax can be avoided if long term capital gains arising out of house or real estate or gold or any other long term capital gain, if we deposit such gains in bonds issued by REC and NHAI. But this budget has brought in a change, and here they have restricted the capital gains to land and building. It means that any other capital gain is not allowed to be invested in such kind of bonds. And moreover, there is a lock-in period of 3 years. The current lock-in period is 3 years for such bonds. This budget proposes a lock-in period of 5 years. So this is the change they have brought in. So far we have seen about the changes in the personal taxation front with respect to long term capital gain tax, or with respect to dividend distribution tax, and the taxation with respect to FIAs, etc. And a few other points also we have seen. But kindly remember that the video has been prepared based on material taken from web and budget material, etc. So we always advise to consult your auditor before taking any tax related decision. And there is also a possibility that government may bring in some changes based on the feedback received from various industrial bodies or various stakeholders. So you can always subscribe our channel, and we will keep you posted on the updates. Thanks for watching this video. Please visit our YouTube channel Model Exam, and if you find it useful you can subscribe there. And this is our website modelexam.in. We are online mock test providers for various competitive finance related examinations like NISM, insurance, or bank related exams like JAIIB, CAIIB, etc. And you can always send your feedback to this email ID, and I hope this video you will find it very useful. And of course some investors may find it difficult. I request investors to go through videos multiple times to understand different scenarios, whereas those who are already in this field like mutual fund distributors, they will find it very easy to understand. So thank you very much. This is Srinivasan signing off from Model Exam.